You only watch this channel if you want to make a lot of money in stocks. That's what I think we're on the verge of doing. There's many signs that stocks are going to continue to soar. I'm going to give you those reasons why. I'm also going to share with you the specific ETFs and the specific individual stocks that I'm investing in. Be sure to like and subscribe because it really helps the channel. The first and number one reason stocks are going up is because inflation is coming down. It does not feel like it's coming down because it keeps going up, but it's going up slower. Since January of 2020, it's gone up about 25%. So it's hard to say, whoa, inflation is really coming down. No, it's not coming down. It's just going up at a slower rate. But you got to start someplace, and that's enough to get stocks going in the right direction. Corporate America in the three previous quarters was showing a loss in profitability. And actually in the third quarter so far, the companies that have reported, 90% of the S&P 500 has reported their profits, and it looks like a 4% increase so far, which is going to hold up pretty well since 90% have already reported. So that 4% increase in profitability indicates a turn in the market, and that's where I get interested in the stock market when I see a turn upwards from the bottom. The other factors are retail sales are good enough that it doesn't indicate a recession, but it's calm enough that it shouldn't spur inflation too much. And also, continuing joblessness claims and initial joblessness claims have increased somewhat, but not to the point where we're going to be fearful of recession. Now, the thing that could give us caution on this, I think it's going to go up for a while at least. We're getting enough negative data to make us not worry about inflation too much, and maybe the soft landing is coming into play. We're getting reassurance that a recession isn't imminent, that they're calming down inflation, and maybe we can have the so-called soft landing. Continuing joblessness claims have increased, but if those start to really spike up, then we're going to be worried about recession. That's even the thing with oil prices. They think part of the reason oil prices went down is because there's lesser demand, especially in China. Two sides of a coin. You gotta pick which one you're gonna go with. I think we're going towards the positive side, at least for now. We may have to revise that and get out, which is why I do a lot of day trading, but I am starting to do some long-term investing, and I'm going to share those with you today. The big excitement for the 3 days preceding Thanksgiving will be NVDA, good old NVDA, which reports earnings after market on Tuesday. We're expecting big things from NVIDIA, especially AMD, which is its chief competitor, reported earnings, and they control about 10% of the market, and they were positive in every category, as can be seen from the table. And its quarter-on-quarter revenue growth was about 8%, but its earnings profit was 800% from the previous quarter. If AMD is doing that well, I think NVIDIA is going to do much better than that. I think we're going to go solidly over 500. We're about at 492 at the moment, but I think there's going to be a lot of jockeying for position on Monday and Tuesday, and then Wednesday is going to be the grand delivery after the market on Tuesday, but Wednesday is when it plays out. And I think we have potential for just a major breakout here. It's already broke out, but it's going to continue to break out. Looking at the chart, you can see that NVIDIA has had stunning growth year to date, and I think it's going to continue. They're selling their U100 chips, which are the best chips for artificial intelligence, and that's the market they share with AMD, is the artificial intelligence market. They are the two big ones. Their price to earnings is like 34, but that really isn't bad when you consider their earnings growth rate, which is tremendous. It reminds me of Tesla. Their earnings growth rate is 42%. So I literally think of NVDA as the Tesla of chip makers because they are so strong in artificial intelligence. Now, the United States government has put limits on what they can sell to China as far as artificial intelligence chips go, but NVIDIA has countered that by making chips that are still advanced but come in just under the stipulations that the United States government puts on it. They came out with the U100 chips, which are the best, and they're making chips for China, which are like U80 chips. My thought with that is they're like 80% of what the chips will be if used in the United States. They are making chips right now that are going to be twice as powerful as the chips they're making right now. They're the U200 chip, and they're 100% better than what they're making right now. It's getting to the point where these chips, it's getting harder to make them faster and faster according to Moore's law. Moore's law, which was formulated in the 1960s, postulated that computing power would continue to double about every 18 months. But Jensen Huang, who is the CEO of NVIDIA, has said that the chips will continue to be more than twice as powerful every 2 years. It's a continuation of the Moore's law. My next individual stock that I'm planning to invest in, is Super Microcomputer. I've invested in this off and on. I play it up and down. This stock is still only at an 18 price to earnings ratio, which is wonderful, and its earnings growth rate is 34%. They make high performance servers for artificial intelligence, which are also highly efficient. It has a good trend, and I think NVIDIA's earnings will affect Super Microcomputer stock movement to a large degree because it's all artificial intelligence related. Looking at the chart, you can see it's had good growth year to date, but it's been up and down lately. But I think it's going to be affected by NVIDIA, and I'm putting a lot of faith in NVIDIA. All signs are that they're going to come through. We just have to see how good it is. And as you know, if you watch this channel, the ETFs that I trade in and out of are the QQQ, QQQ, and the TQQQ. I use the TQQQ for day trading only. It is so volatile, and that's why I use it for day trading. You want things to be volatile when you're doing day trading. On the other hand, if you want to do longer term swing trading or even long-term investing, you use the QQQ, which is the 100 largest companies on the NASDAQ. It includes the Magnificent Seven. Those Magnificent Seven stocks make up 55% of the TQQQ. It's definitely the way to go, I think, when you're investing in technology. And it's a good long-term strategy, and it's a good swing trade strategy. But the TQQQ I reserve for day trading, which I'm doing a lot of. But I am slowly going into individual stocks and going into NVIDIA and going into Super Microcomputer. I'm also in Rolls-Royce, whose symbol is RYCEY, which I've talked about in previous videos. As you look at the chart, you can see that QQQ and TQQQ have been exciting since the start of the year. I plan for them to keep going up in this Santa Claus rally. I think we've started it early. It is almost Thanksgiving after all, and that's the official start in our minds of the Santa Claus rally. Be sure to check back in to see how this all pans out, and happy Thanksgiving to everyone.